morning. It's McCollum on Business. I'm Stephen McCollum. For the next 30 minutes or so, I'm going to get you updated on what's happening around the business world. We got national stories, local stories, the market watch, stocks we're paying attention to, all coming your way. A bunch of updates today in terms of companies and stories, including one of those meta lawsuits went to the jury, and a jury came out. This is a New Mexico one, came out with a verdict yesterday. We'll give you that update here in just a moment. But first, yesterday was a sell-off day around the market. Today, is there more optimism, more sell-off? Let's get into it with that Market Watch. Well, looky here. I mean, it's basically even right now, but it is interesting times here this morning because our U.S. reportedly sent an Iran peace plan. And folks, the service we use, they're usually a little bit delayed. I can tell you, market is increasing here as this morning goes on. Market's been open for about 30 minutes right now. You're seeing on your screen there the Dow Jones up 12 points. I can tell you it's up about 297 points here as well. Oil has fallen this morning. S&P 500's down 5 points right now. It has flipped a little bit. It's at 30 points right now if you look at the actual market without the delay. Nasdaq's up 189 points right now to 21,951. The Russell 2K shows 4 points down here on your screen. Well, it's kind of flipped here as well and gone 37 points up. U.S. sends Iran peace plan reportedly. Oil has fallen today on that news. Market is getting better here as you see things starting to turn into the green here right now as well. So now Iran is saying that they're not going to accept U.S. effort at ceasefire and war, according to their state media. But we'll have to see where this goes throughout the day. Bitcoin still above that 70,000 level, 71,565 as of right now. And look, the market is literally changing a lot here based off of the news just breaking. So we'll have to see where it goes here when we come back and look at the stock market with the Market Watch here in just a little bit. Stocks we are paying attention to this morning, one called CF Industries, fertilizer company. They're up 0.23% right now. They were down in pre-market. We're down at the market opened, flipping a little bit here to 0.33% right now. Well, the reason why, the negotiations surrounding that U.S.-Iran war, well, it's going to mean less of an industry shortage here in fertilizers, which is what CF Industries specializes in. So if the shortages and the scarcity of fertilizer ends, well, that means CF Industries isn't going to make enough money. As you know, fertilizer prices have soared since this war started. The Strait of Hormuz, a lot of fertilizer comes through that strait. So CF Industries has been up in terms of a stock 27% since the start of the conflict. What was that, 3 weeks, a month ago now? Well, 0.9% up right now. Did fall in pre-market and earlier in market trading. Something to watch here because as fertilizers gets flowing through that Strait of Hormuz again, obviously means fertilizer is going to be more readily available, not as high pricing. So CF Industries with that 27% gain in the last month, it'll be interesting to see if that comes back down to normal or does stay up the rest of the year. And then there's a company called ARM out there. It's a chip maker. Folks, we talk a lot about NVIDIA and Taiwan Semiconductor. Well, ARM is up 15.21% right now. They unveiled its first in-house chip. They say it would generate $15 billion in revenue by 2031. Obviously, that's great news to investors' ears. That's why ARM Holdings is up 15.26% right now with that new in-house chip. And then there's EchoStar out there. They're up big today as well, 9.75% this morning. All because we got this story coming away here, just a few. But the information, that media entity, they reported that SpaceX could file for an IPO as soon as this week. That means this EchoStar, well, it has about a 3% stake in the SpaceX company. Be huge numbers there with an IPO with that stake. So EchoStar up 9.83% based off of the SpaceX news today here on the market as well. When we come back later, well, tomorrow we're going to look at Chewy, the the pet product, not just dogs, but pet product company. We're going to look again at KB Homes. We told you yesterday that investment company initiated coverage, said that KB Homes was undervalued as a stock. Well, they did their reporting yesterday, so we'll give you that update. And then we'll talk about Robinhood. Obviously, cryptocurrencies kind of been struggling. 71,000 here today, roughly for Bitcoin. They're in the news as well. They're making some waves with an announcement, so I'll give you that update on Robinhood coming up in just a little bit as well. But first, breaking news, as I said, on the Strait of Hormuz and the war, U.S.-Iran war. Supposedly, U.S. sent a thing. That's the major update there, which is causing the market. Oil prices are dropping right now. The fertilizer stocks you saw there, basically even for that, at least CF Industries. So a lot of excitement here around that news. We'll see where it goes from there. That's obviously the breaking news. So let's move to company news out there. And specifically, it's a follow up here. A New Mexico jury did come out yesterday. Folks, they ordered Meta to pay $375 million. This lawsuit here was the New Mexico jury found that Meta did violate state law there in New Mexico by misleading users about the safety of its platforms. And also, they say they allegedly enabled child sexual exploitation with their platforms. Of course, this is Facebook, Instagram, whatnot, those companies. Jurors found that the Meta violated New Mexico's consumer protection law following a lawsuit brought by their attorney general, who did accuse Meta of failing to protect children from predators on their sites. The verdict marked a major legal win for the state of New Mexico. It's also believed to be the first time a state has prevailed at trial against a major tech company over these claims, the claims that they harm children through its platforms as well. So, there's also that private trial going on with the defendant suing, and there's 3,000 other ones out there. So these are the cracks we're starting to see in these technology companies. The lawsuit was filed in 2023 by the state. It alleged Meta created a breeding ground for child predators and misled users about safety protections on their three apps, Facebook, Instagram, and WhatsApp. The $375 million penalty, it's significantly lower than what the state actually wanted. They wanted $2.1 billion from Meta as well, but the jury awarded the maximum allowed under state law, and it's $5,000 per violation is how they came to that number as well. No shocker here in this part. The Meta says, of course, it doesn't agree with the verdict. They plan to appeal the verdict as well. Is this the first crack here in a tech company where they can't keep hiding behind, we just published this stuff? This is going to be fascinating to see if this dam starts breaking here for these companies. And hey, speaking of Meta platforms, we talk a lot about Elon Musk and his pay package with Tesla, for instance. He has to hit certain goals in order for him to get, quite frankly, large payouts in terms of stocks and things with Tesla. Well, Meta platform, excuse me, I was trying to hide that. Meta Platforms is now doing that for their executives, their top executives. Yeah, Meta Platforms has offered top executive stock options, and it could pay out a large sum of money, hundreds of millions of dollars, and they're tied to lifting its valuation sixfold. They want that valuation to get to $9 trillion. Now, they're doing this because it's a bid to retain talent. Same reason Tesla said that with Elon Musk. If we want Elon Musk to stay here, we've got to give him this deal. So they want to retain talent. They want to spur aggressive growth within their company. Basically, it's based around the AI and artificial intelligence race out there. These options for the social media companies, it's the first for its top brass and required steep stock milestones, folks. Are these real goals, or is this just kind of like a big paperweight to try to incentivize people to get there? Yeah. So now this is a big deal because Tesla obviously has done this with Elon Musk as the CEO, but now they're doing it with top executives, and this is showing that the big tech companies are going to start rethinking incentives because it's pouring those hundreds of billions of dollars into data centers. And they're not able to raise debt to gain an advantage in the AI race. Some of these debtors, banks and stuff are kind of saying we're not going to keep funding you with your dollar amounts as you can afford the loans and stuff to that effect. So they have to get creative now. So here's how this deal works if you're a top executive at Meta. The stock will have to rise to at least 88.2% from Tuesday's closing price of $592.92. The stock would have to get to $1,116.08 to unlock the lowest price of those stock options and those options. That's a six-fold jump would be needed to unlock the most aggressive releasement of options. The company's shares would have to rise to $3,727.12 to get to that highest level of the bonuses for these top executives as well. This was all done in regulatory filings yesterday as well. So if you got to that highest level there of the 3,700 and whatever to unlock the highest level of the bonuses, well, Meta would have a market value at that time more than $9 trillion. That's much higher than NVIDIA right now, who's currently the world's most valuable company. Their valuation is a mere $4.257 trillion. You have to double that here as well, which is possible over time, but Meta says the price targets have to be met by February 14th of 2028. That's a quick turnaround for those options to vest. Now, if they don't get to that level and the options don't vest, Meta executives' unvested options would become available to them in installments through August 15th of 2030. Those options will expire in March 2031 if they are unexercised. So it's kind of the pay. We're going to see more and more of this style that I'm going to call it the Tesla style of compensation with Elon Musk, but not just CEOs now. We're going to start seeing it with top execs, and you're going to see it trickle down through the company a little bit as well here coming up. So two interesting stories there from Meta is, of course, they had that $375 million verdict sent out there as well from New Mexico. And we showed you this here when we talked about EchoStar and the stocks we're paying attention to this morning. And that's simply EchoStar's up today because SpaceX is aiming to file that IPO prospectus with regulators later this week or beginning of next week. I told you earlier the information that reporting company, they reported this on Tuesday. They of course their source was people with direct knowledge of the plans. Advisors involved in the preparation do predict the company could try to raise more than $75 billion in the IPO, and they're going to get it as well, people, as well. The individual investor portion might exceed 20%, but the percentage has yet to be finalized as per the report. If it's something you're kind of interested in, there you go, SpaceX. We knew it was coming this year, coming quicker than I think we all thought it would be. And speaking of space with SpaceX there, we're going to switch over to NASA right now. NASA's changing some things up. NASA's canceling plans to deploy a space station in lunar orbit. They're canceling those. We're done. We don't want to go to lunar orbit. Well, they instead want to use its components in that lunar orbit because they want to construct a $20 billion base on the moon's surface over the next 7 years. Yeah, this all comes from the new head of NASA. He said all this on Tuesday. So the one that they've canceled, the Lunar Gateway Station, it's already built with contractors Northrop Grumman and Vantor, those two companies. Well, it was meant to be a space station parked in lunar orbit. Now they're going to try to repurpose the craft for a lunar surface base, and that's not easy to do. Two different setups, right? From being in lunar orbit and actually being on the moon itself. Lunar Gateway was designed to serve as both a research platform and also a transfer station that astronauts would use to board the moon landers before descending down to the lunar surface. The change has companies involved in this, the Northrop Grumman and the other company. Well, they're scrambling right now to accommodate all of these changes. And there's extra urgency right now because China is making its progress toward its own 2030 moon landing coming up. And so NASA making some more aggressive changes on something that's already been built out there. So we might have a base on moon here soon, folks, is what that story tells me. And, it's a tough time in a lot of communities. We have a story coming up here on consumers and who's struggling and who's not and things to that effect. That's coming up here, just a couple of stories, but we know companies are laying off everywhere, and now we know it's been hitting the software side for a lot of times, but Epic Games, the maker of Fortnite, They announced layoffs of 1,000 employees yesterday, and they cited specifically declining Fortnite engagement with their game. Here's the letter that came from their CEO, Tim Sweeney. He admitted all this in a memo to staff, and he said, "We've had challenges delivering consistent Fortnite magic with every season. Today, we're laying off over 1,000 Epic employees. I'm sorry we're here again. The downturn in Fortnite engagement that started in 2025 means we're spending significantly more than we're making, and we have to make major cuts to keep the company funded." The memo went on to say, and that broader weakness in the video game industry is weighing on Epic Games' finances. The cuts aren't the only thing they're doing. They're also going to do more than $500 million in savings. They're going to lower contracting contracts and cancel some of them. They're going to lower their marketing spending dollars, and they're not going to fill unfilled roles within the company. Well, they say that making these two changes, the layoffs and the $500 million in cuts, will leave Epic Games in a more stable place, in that letter, he said. The cuts are the latest in the gaming sector. Companies have faced weaker growth. Consumers have been sticking to proven titles, not spending as much, all because of economic uncertainty. And of course, not just that, but just, gas $4.99 at gas stations this morning, folks. The one just down the road here, the Quick Trip, $4.99. That's eating into the discretionary spending. And these companies are definitely a part of that as well. So that announcement yesterday, but here's the problem. Now, it's not just the games, but live services games like Fortnite. They depend on a steady stream of new content because players would get bored with it if you don't keep getting new content. Well, they're now showing signs of cracks officially now, as not being able to keep people interested and people are quitting to play. Like I said, a lot of that could be economy based, but no, but this isn't. This is Epic's second major round of layoffs in 3 years. In September of 2023, they cut about 830 jobs, which at that time was about 16% of its workforce there for Epic Games. So, and not only that, but AI's even having a shutdown side of it. And OpenAI, ChatGPT maker, they're shutting down that social media app Sora, which has made a lot of waves lately here for controversy, but also this is the company that Disney was investing $1 billion into and lending their characters to it for AI development on videos. And Sora went viral last fall because they wanted it to be a place to share short form videos generated by artificial intelligence. But then again, like I said, a lot of controversy around it, not just in Hollywood, but in other sites. OpenAI did say in a brief social media message yesterday that it was, quote, saying goodbye to the Sora app, unquote, that it would share more soon about how to preserve what users already created on the app. Uh, OpenAI did release Sora in September, and as an attempt to capture the attention and potentially advertising dollars that follow short term videos on TikTok, YouTube, or even Meta owned Instagram and Facebook. So they're basically the new Vine is what they're trying to do, but do it with AI videos. Now, I would argue it wasn't being used very much. They, of course, are arguing that the growing chorus of advocacy groups, academics, and experts, well, they all express concerns about the dangers of letting people create AI videos on just about anything that you can type into a prompt. Well, so the whole concept of this led to a lot of non-consensual images, of realistic deepfakes as well, and a ton of what they call AI slop, which is just a bunch of deepfakes that don't make any sense. OpenAI was forced to crack down on AI creations of public figures, things like Michael Jackson, Martin Luther King, Mr. Rogers as well. All of them are created doing crazy things out there. But they didn't crack down on it until there was an outcry from family estates and an actors union got involved as well. So it's an interesting place to be, but this started in September, folks, and it's already shut down by OpenAI. As I told you, Disney made that deal with OpenAI last year to bring their characters to Sora, $1 billion investment. Well, Disney did say in a statement Tuesday that it respects, quote, OpenAI's decision to exit the video generation business and shift its priorities elsewhere, unquote, from Disney. So Disney's out of that $1 billion deal as well. So look, it's interesting here on the AI side. I just would argue a lot of people didn't want that service is the bigger issue there on more than on the controversial side. We've seen a lot of those virals like Vine, the short video companies. Now TikTok does it well, but those short video companies just haven't survived over the years, and tells you that people necessarily don't want that type of service out there. And I told you earlier we're going to talk about American workers and how the pressure is on the lives and everything. Well, there is a survey out here today as well that there's more pressure on American workers and their lives. The greatest share of workers are reporting that they feel they're struggling more than they're thriving. This is all from a new survey and a new poll by Gallup out there. Gallup did release this yesterday on Tuesday, and it's fresh data for the firm's Life Evaluation Index. It measures how people do rate their current and expected future lives since 2008. So it asked the respondents to evaluate their current and future lives on a 10-point scale. That's broken down as thriving, struggling, or suffering are the three categories. The firm's survey of U.S. workers conducted in the fourth quarter of last year, it found that the share of those thriving, well, it declined from 50% the same quarter a year ago, went down to 46%, while those struggling rose from 46 to 49% in that same period. Now, this shift here to the struggling side, well, it comes after the index's findings in 22 and 23. Back then, the share of American workers that said they were thriving was in the low to mid 50s. That was an indication of resilience after the economic turbulence, of course, of the pandemic and that time frame. The last decade did see relatively high numbers of respondents classified as thriving. Gallup's metric, though, remaining steady between 57 and 60% from 2009 to 2019. Respondents classified as thriving brief dip to 55% in 2020, then it rebounded in 2021, but it's been on a steady decline since that 2021 timeframe. The share of respondents who were thriving hit a record peak in the third quarter of 2022. Well, it was 55% then, compared to 41% of respondents who were struggling. It's a 14-point spread back then in favor of thriving, is the largest differential since 2022. Workers who are struggling instead of thriving, they also pose challenges to employers. So it's not just on your life specifically, but employers and bosses, et cetera, companies. Well, the more you are struggling, well, you may face more absenteeism and turnover from struggling workers as well. Here's what the Gallup survey said: thriving employees miss 53% fewer days of work due to health problems, and they're 32% less likely to be actively seeking a new job. As thriving falls, organizational performance risks do follow. So it's interesting dynamic here in this survey. While the report indicated that all major segments of the U.S. workforce did experience a worsening outlook on their lives since 2022, Gallup did note that federal workers, well, they've seen a more severe and rapid decline in their outlooks. That's not a surprise with the shorting, the dismissing and shutting down, or basically cutting down the amount of government employees out there by this Trump administration. Federal workers were more likely than the average U.S. worker to be thriving in 2022. They had an average of 60% at that time. That was 6 points above the national average and 4 points higher than the state and local government workers. Now, the problem is by late 2025, their thriving rate fell 12 points to an average of 48%. Not even close. They were far outpacing the decline for average U.S. workers. Their rate was down 6 points to 48%, as well as state and local government workers. Their combined thriving rate was down 6 points to 50% as well. So, federal workers taking the biggest hit here in terms of thriving to a struggling out there. And we're starting to see true numbers here over the last several months of what's happening here in this economy. And that's going to get worse. Look, if gas prices are $4.99 here in Phoenix and in East Mesa, I can tell you that. Quick trip out in East Mesa, quick trip at 44th Street in Oak over here by Thomas. $4.99 gas here this morning at these places. And when we come back here, we'll talk some more about Disneyland. If you're going on vacation coming up here in May, Well, one of your favorite rides or might be shut down. I'll give you that update coming up here as well. And Costco making some changes as well that you probably want to. They want to get into the not going to a restaurant phase. That's going to get worse with gas prices skyrocketing. We'll get into that as well. D-back season opens tomorrow on the road. But we'll give you about some updates here around the stadium. I've been rallying on this here at the main event for, for a couple weeks now. We'll talk about the business side of it and what they've done at that stadium here on this program coming up. So come on back. Call them on business. And we're back here, McCollum on business. Woo, working faster during that break here, trying to get some updates on what is happening with the Iran-U.S. war. And as I told you earlier in the show, U.S. reportedly sends Iran a peace plan. Well, Iran has said via their state media that they will not accept a U.S. effort at ceasefire in the war. So we've got to keep our eyes on that. But that is, of course, affecting the market today as well. Oil has fallen today as well. And with all that being said, before we get to the market watch, don't forget, as soon as we're done here, we put this show up on demand, not just at Robat TV, but on our production page here for our company, TME Media, TME Media AZ there on YouTube. You can catch all of our programming that we produce and put out here at Robat TV on that YouTube page for free. So check us out there. Of course, the main event, this show, McCollum on Business, the pit stop, all on there on that site as well. And then as soon as we get done here, the main event comes up live 8 to 10 a.m. Me and Dale Hellestrey, 17-year NFL vet, get you updated on the sports world. That has, of course, YouTube as well. As soon as we're done there, live here at Robat TV on YouTube on demand. And then, of course, free podcast system as well. For those of you that want to listen to the free podcast, there you go for you. Then, of course, Pit Stop. Actually coming to you tomorrow. Be out on Thursday for you by 2 p.m. We'll look back here at Darlington, look ahead to this weekend's racing. IndyCar had last week off, back in the track this week. Long Beach here this week. I'm sorry, Alabama this week for IndyCar. We'll talk about that coming up tomorrow, Thursday, 2 p.m. At the latest, it'll be up for you here at TME Media Arizona, or AZ, excuse me. Free podcast system, the Pit Stop Talk. And also follow us on social media, the Pit Stop Talk as well, where we talk all of our racing stuff out there. The Real Matrix on Rumble, rumble.com/user/TME Media, where you can find all the Rumble shows for free as well. And free podcasts for that. The Real Matrix, Angry Patriot, just search that on your favorite podcast system. New episodes on Friday, 10 a.m. here at Robat TV, noon for Rumble as well as the podcast systems. And for those of you that like Rumble and don't like YouTube, since we're using Rumble for the Real Matrix, well, we'll also be throwing some sports programming on there. Here coming up, we got to create some pages and do some other things to get it started. I think it's all been approved and ready to go. We'll get those up and on that sports page for you as well there. Don't forget to follow TME Media AZ also on X. That's our parent company here that we do for our production company. Going to start giving you all the updates right now. I got to put the logo up. We are creating a logo and took a little bit longer than anticipated. I think we finally settled on one. But we're going to use that page to put out all the promotions, not just what we do here for our shows at Robat TV and on the YouTube page, but also what else we produce. We'll have some fun stuff around that as well. That goes out in other entities. So y'all can see what we do here and how we'd love to work with you as well in some capacity. So follow TME Media AZ as well. They're on X for us as well. With all that being said, is it still a good day on the market? Let's get into it with that Market Watch. It is. I told you the market was getting better. Anytime you use a service, it is delayed by a little bit here. I told you it was switching over here to the positive side earlier in the show, and it's still there as well. I can tell you the Dow Jones, if you go to the market itself, Dow Jones is up about 300 points right now as well. But on your screen, it shows up 91 points right now. S&P 500 up to 12 points. NASDAQ's up 276 points right now. Then the small cap index is up 10 points. It's just the indexes require a little bit of a delay for services that push out their stuff there. That's all we're seeing here. But it is a good day on the market based around oil falling and the Iran peace plan reportedly out there. Even Bitcoin, 71,479 as of right now. I wouldn't say it's rallying, but it's at least staying above that 70,000 level as we talk about that as well. Stocks we're paying attention to. First one, well, pet products out there. We're talking about Chewy. Well, they jumped big this morning, 14.84%. They delivered its fourth quarter reporting. They had an adjusted EBITDA that did beat the consensus estimate. The problem was revenue was actually slightly under expectations. So the earnings per share were above numbers. But Chewy right now at 15.18%, even with revenue being slightly under their expectations. We looked yesterday at KB Homes, an investment company initiated looking at them, and they called them undervalued as a stock. Well, KB Homes is our next stock we're going to look at again today as an update, and it's all because they reported yesterday. And if you can guess here, 5.61% down, that reporting did not go well. Not a surprise because they have interest rate problems and other things in the home builder industry, costs, etc. They did report their first quarter earnings of 52 cents per share. Well, the analysts were expecting 55 cents per share. The company had $1.08 billion in revenue. Well, missed the consensus there of $1.10 billion in revenue. KB Home forecast current quarter housing revenue and deliveries. Not a shocker as well. It missed the estimates out there for their current quarter housing revenue and deliveries. No shocker that that's going to happen in this home building side, which is interesting that company initiated coverage yesterday and called this stock undervalued in this market with interest rates soaring again and then costs going through the roof as well. But there you go. KB Home's down 5.18% right now. And then there's Robinhood. You know, financial services tied to cryptocurrencies most of the time. Well, they're up 7.09%, not because there's any rally in the cryptocurrencies. No, they unveiled a $1.5 billion stock buyback plan. This repurchase plan will take place over the course of 3 years, and it's going to begin here in this current quarter. So Robinhood, 7.17% up right now as well. And by taking shares out of the market, well, that obviously helps increases your value here if you are a stockholder of Robinhood with less shares out there on the market. And let's get into a couple other stories here as well, kind of on the national scale or at least regional here. If you're planning to go to Disneyland over in California, well, in May specifically, and maybe June. I don't understand why they do this when the peak travel period's coming up, but one of your favorite rides might not be working for you. Disneyland Resort has confirmed that both the Pirates of the Caribbean and the Blue Bayou restaurant, that's the restaurant you go by when you're floating at the beginning, well, they say it's going to close beginning May 4th, according to official Disneyland website. The closure is due to refurbishment work at Blue Bayou restaurant. They want to enhance the dining experience there. And then, so what that means, well, they got to shut down Pirates of the Caribbean. So Pirates of the Caribbean is going to also undergo refurbishment. Construction activity may obstruct views and generate noise in other areas around those two spots. Disney has indicated that Blue Bayou restaurant is tentatively scheduled to reopen in late May of 2026, but no official date has actually been announced for Pirates of the Caribbean, which obviously suggests the attraction could be closed for longer. And I don't understand why they do that. Do that in the off season. Do that stuff in the off season, people. But just be aware of that here if you're planning a Disneyland trip here coming up as well, and around that. And as you know, also we just talked about the struggling from the poll from the Gallup on struggling Americans and things, and as we know, and we've seen it in numbers, but going out to dinner used to be part of a weekly routine for us Americans, but it's becoming a luxury with pricing and those things. In late 2025, 37% of Americans reported that they were dining out less frequently than they were a year prior. This is all according to a YouGov survey that came out. Among those cutting back on dining out, 69% cited the rising cost of restaurant meals as the reason. I'm giving you all this because people are moving to wholesale shops here as well, getting away from grocery stores. In February, the cost of dining out rose 3.9% on an annual basis. That, of course, we get from the Consumer Price Index. Grocery prices are up, as we know, and going to continue to go up because of diesel prices out there. But groceries did go up, but at a slower pace. It was only 2.4% for that time frame. The shift away from dining out opens the door for grocery stores to up their game when it comes to at-home meals. Well, Costco is trying to take advantage of this as well, moving forward. U.S. consumers plan to cut back on restaurant spending in the coming months through a combination of fewer visits and a decrease in the amount spent per meal. And then at that same time, Americans, well, they're moving over to more of their income toward the grocery side of things. A recent data from Placer.ai, it shows that as of the fourth quarter of 2025, grocery store visits were up compared to a year prior. You want to get specific on that number? Fresh format grocers increased 10.9%. Visits to value grocers rose 7.1%. Wholesale clubs like Costco, uh, the one from Walmart, Sam's Club, well, they increased 7.2%. Visits to traditional grocers only went up, but only 4.4% at the same time. So consumers are seeking value as of right now. They're looking to minimize the grocery spending as well. Often, well, that means you lean into the bulk savings offered by warehouse club giants, Costco, Sam's Club, for instance, as well. So Costco wants to get in on this a little bit, is basically what we're setting that story up for and everything, is what Costco's going to do. They've been known, as you know, for their assortment of affordable, family sized prepared meals. And now Costco's upping its game with new products to make quick, easy dinners out there as well for you if you're interested in that. All through the Kirkland signature brand as well. So Costco members, they get excited when new food products hit the shelves. They have the free samples and all that stuff as well. So people are just shopping at Costco more and Sam's Club more than your normal grocers. They're going in there and they're buying bigger packages of meat, for the quote unquote cheaper prices, freezing them into that effect as well. But Costco's getting into, they've been involved with it. They're getting into, basically meal preparation stuff as well that you see. You see those fries around town, things to that stuff. So they want to do, Costco's getting into reasonably priced entrees to a selection of prepared foods. And also they say that they're going to solve that key problem for consumers. You know, um, one, cooking meals at home with freshly prepared. So just be aware of that here coming up if you're looking to save some money. People are already shifting that way. But Costco's trying to take advantage of that coming up as well. So just want to say the other options of where people are trying to, companies are trying to give you value and that stuff from that side. I was shocked that grocery stores are only 4.4% up in Costco, Sam's Club, et cetera, 7%. And those value shops like Aldi, up over 10% in terms of shopping on that side as well. So here around town, in terms of the local stories, well, Honor Health, its rating as nonprofit system, they're pursuing that $600 million expansion we've told you about multiply here. Well, they've been downgraded by a company called Fitch right now. So they're Latest company report card is not going well here for Honor Health as well. So, um, Honor Health recently lost its A plus Fitch rating status, and it has a negative outlook from the ratings company as well moving forward. Here's what Fitch said: the downgrade reflects higher than expected strategic spending and weaker operating results during integration of acquired assets, in which Fitch's view have reduced financial flexibility. This all came out here just a week or so ago on March 18th. Honor Health's issuer default rating, well, it's an A now, which doesn't sound like it's a big drop, but it is in those circles as well. Fish also downgraded the long-term healthcare revenue bonds issued by the Industrial Department Authority uh, to that. So it went from an A, it went to an A as well from an A plus, means higher interest rates and things to that effect with this $600 million expansion going on as well. So obviously, Honor Health's come out, and their CEO says he's not concerned with this at all. They say they'll continue on their transformational mission, pointing to its selection as the primary clinical affiliate for ASU's new School of Medicine and Advanced Medical Engineering. So they're not worried about it. They're going to continue the growth out there as well. 18,000 people work for Honor Health as well. So interesting here on the downgrading and kind of the concern from the financial side of things here for Honor Health. Something to slowly keep an eye on as they continue their growth out there. And of course, baseball season gets underway today, opening day. One game tonight. Yankees are at San Francisco Giants. They're a Netflix game for you. It's a whole nother subject we can spend hours on. But also, Diamondbacks underway at Dodgers Stadium here tomorrow night to get their season underway. 3 over there in L.A. But when the Diamondbacks come home after that series, they face the Detroit Tigers. They've invested heavily in their stadium this year, specifically AV upgrades ahead of this season as well. If you watch the last couple games, the ones 2 nights ago at night, yesterday's day game, the announcers have done nothing but talk about the big screen and the ribbons around the stadium as well. So, Daktronics has partnered with the Arizona Diamondbacks. They designed, they manufactured, and installed what is now the largest LED video display in Arizona, and those 3 ribbon boards. The ribbon boards are the ones that go around the seating bowl. You see them in basketball arenas and things to that effect. So this video display in center field is going to be it is 9,600 square feet, 52% increase over the previous display. It's top 10 in size at the major league level. They get all these stats here from the Arizona Diamondbacks as well. The ballpark now has more than 21,000 square feet of digital signage. So 16.9 million pixels. Yeah. You go to watch a baseball game, you get entertained by televisions, giant televisions in center field, and digital displays around the seating bowl as well. So the main video display there in center field that you see on your screen, 63 feet high, 152 feet wide. Yeah, that's how big that is out there. The run ribbing display runs from right field foul pole to behind home plate and past the left field foul pole. That's going to be the one that's 1,141 feet long. The upper ribbon display is going to go 964 feet long, and a press box ribbon display will measure 232 feet long. There behind home plate as well. Yeah, so those are all going to be about 3.5 feet high. You can't miss them when you're in there as well. So there you go, folks. No AC in there still, though. They haven't fixed that yet. I know. I rant about that, but I wanted to bring you the business side of things here. They're at the stadium, and boy, are they proud of that. And I don't know about you guys, but my biggest complaint is when I go to a game, I want to watch the game, not the video boards out there. But I digress on that. That's for the main event. Appreciate you guys joining me here. Gals and ladies joining me here this morning on the McCollum on Business. 7 a.m. We'll be back tomorrow, Thursday, for 7 a.m. McCollum on Business as well. Been an up and down week so far. How does tomorrow turn out? Well, we'll have that answer for you. Well, Thursday morning, 7 a.m. We'll see you then. Coming up next, main event, folks. See you tomorrow.